Something odd is going on with XRP right now. It's not just retail investors getting excited. It's not some random rumor going around on social media. And it's not the kind of story the crypto world usually forgets about in a day. That's because, behind the scenes, some really big names in finance seem to be getting involved with XRP in ways we haven't seen before. Money coming into institutional ETFs is going up again. Big companies are offering more products related to XRP. Wall Street is quietly getting more involved. And Ripple is pushing further into the actual backbone of finance. At the same time, regulators in the United States are slowly changing how they talk about crypto itself. And when you put all these things together, you start to see a much bigger picture forming around XRP. A picture that could change how big financial institutions see this asset over the next few years. But this is where things get even more interesting. Because while most people are focused on the price right now, many experts believe the real action might actually be happening deeper down, within the very structure of global finance. Today, we're going to break down the latest confirmed news about XRP, what big institutions are actually doing, why money flowing into ETFs suddenly matters again, and why Ripple's growing role in digital finance is getting serious attention from everyone in the industry. And trust me, one of the biggest details in this whole story is something most people completely missed. Let's talk about it. Over the last few weeks, XRP has quietly become a big topic again for financial institutions. Now, if you've been following crypto for a while, you already know XRP has always been one of the most talked about assets in the market. For some investors, XRP was seen as the future of sending money across borders. For those who didn't like it, it was too closely tied to rules and regulations that weren't clear, and for years, that uncertainty hung over the asset like a heavy cloud. But 2026 feels different, because the discussions around XRP aren't just about guessing its future value anymore. They're increasingly about its use in infrastructure, making money available, settling payments, and giving big institutions access. And one of the clearest examples of this change is happening with XRP ETFs. According to recent reports, spot XRP ETFs in the United States have now collected well over $1 billion in money since they launched. That's a big deal on its own. But what really caught analysts' attention was how steady those inflows were, even when the rest of the crypto market was going up and down. That's not typical behavior from money that's just looking for a quick profit. That's the kind of behavior institutions often show when they're building up their involvement for the long term. And according to Ripple's own comments to institutions, some of the world's biggest financial companies are already taking part. Now here's where things really start to pick up. One document reportedly showed Goldman Sachs holding about $153 million in XRP ETF exposure, spread across several different ETF products. Not all in one place, but spread out thoughtfully. That detail is important, because diversifying an investment often means it's a planned part of a portfolio, not just a temporary gamble. And Goldman wasn't the only one. Other institutional names linked to XRP ETF involvement reportedly include companies like Millennium and Citadel. Now, to be clear, institutions are still much less involved with XRP than they are with Bitcoin. But many analysts think that might actually be the point. Because XRP seems to be going through the exact same stage that Bitcoin ETFs went through before institutions really started jumping in, and this might be the biggest mental shift happening right now. For years, XRP was often seen as the lawsuit coin. But now, the story is increasingly about what it can do and how it fits into existing systems. That's a huge change, and Ripple seems to know it. Recently, the buzz around XRP picked up again after reports connected Ripple to several initiatives involving digital finance and payment settlement infrastructure for institutions. One development that got a lot of attention involved a trial run of settling tokenized U.S. Treasury bonds, reportedly done on the XRP Ledger with major financial players like JP Morgan, MasterCard, and Ondo Finance. Now, think about that for a second. This is where the story goes beyond regular crypto news. Because settling tokenized treasury bonds isn't about speculative digital coins, it's about infrastructure. It's the kind of financial plumbing that institutions care deeply about. How fast payments settle, how efficiently money can move, reducing operating costs, working across different countries. Those are problems worth trillions of dollars, and Ripple has spent years putting itself right in the middle of solving them. This is also why many analysts believe XRP's long-term importance depends less on everyday excitement and more on whether institutions truly start using blockchain payment systems on a large scale. And according to several recent reports, institutions seem to be getting more interested. A survey discussed earlier this year showed a significant percentage of institutions either already owning XRP or planning to buy it in 2026. Now, of course, surveys aren't guarantees. Good intentions don't always turn into actual investments. But the trend itself is important, because institutional finance moves slowly, until it suddenly doesn't. And historically, once big financial systems start adding new infrastructure, things can speed up surprisingly fast. But this is where another part of the XRP story starts to become important: rules and regulations. Because for years, regulation was arguably the single biggest hurdle preventing XRP from being adopted in the United States. And even today, clear rules remain one of the most talked about topics in crypto markets. But the tone has changed quite a bit compared to previous years. Multiple reports now suggest that institutions are becoming more comfortable with digital assets, precisely because the regulatory situation seems to be getting better. And according to several analysts, that changing environment is one reason why XRP ETFs have attracted renewed attention. Now, none of this guarantees what will happen in the future. Crypto is still unpredictable. Regulatory landscapes can still shift, and institutions don't adopt things overnight. But the market clearly seems to be entering a different phase compared to the uncertain environment that dominated previous cycles. And there's another detail here that many individual investors might not fully appreciate. Institutions rarely make decisions based purely on feelings. They base them on systems, infrastructure, efficiency, managing risks, and increasingly, making things digital. That's why Ripple's wider growth matters, because XRP is no longer being discussed only as a cryptocurrency. It's increasingly being talked about as part of a larger financial system. And one major example involves stablecoins. Ripple's RLUSD stablecoin system continues to grow, with reports indicating increasing integration and more money becoming available around the XRP Ledger. Why does that matter? Because stablecoins are quickly becoming one of the most important parts of digital finance. Governments are watching them. Banks are studying them. Payment companies are adding them to their systems. And stablecoin infrastructure could eventually become one of the fundamental layers connecting traditional finance to blockchain systems. If that happens, assets related to moving money and making payments efficient may become increasingly important. That doesn't automatically mean XRP will dominate everything, but it does explain why institutions continue to watch the ecosystem closely. And this brings us to another interesting development: security infrastructure. Ripple recently talked about a multi-step plan to make the XRP ledger more resistant to quantum computing over the next few years. Now, quantum computing sounds like something out of a sci-fi movie, but big institutions think in decades, not weeks. So when financial infrastructure companies evaluate blockchain systems, long-term security becomes an important conversation. And that's one reason some analysts believe Ripple is trying to position the XRP Ledger as institutional-grade infrastructure, rather than just another blockchain network competing for temporary trends. But despite all this momentum, there's still an important reality check investors need to understand. Institutional adoption doesn't always immediately mean the price will go up. That difference matters a lot. In fact, several reports noted that although institutional interest around XRP is increasing, individual investors still make up a major part of XRP ETF participation today. So while institutional involvement is clearly growing, the market may still be early in the adoption process compared to where Bitcoin ETFs eventually got to. And honestly, that uncertainty is part of what makes the current XRP story so interesting, because the market is trying to answer a huge question right now. Is XRP truly becoming a financial asset for institutions? Or is this just another temporary story in the market cycle? That's the real debate happening quietly. And depending on who you ask, the answer looks very different. Some critics still argue that Ripple's commercial success doesn't automatically guarantee long-term demand for XRP. Others believe XRP's role within money flow infrastructure could become increasingly valuable if digital finance expands globally. And this is exactly why the XRP conversation remains so emotionally charged, because it sits right where crypto speculation, regulation, banking, and future financial infrastructure all meet. Very few digital assets are in that position. But perhaps the most important thing happening right now isn't even about the price. It's about how people see it. Because how people see something drives money. And how people see XRP seems to be changing. For years, the talk was mostly about lawsuits and uncertainty. Now the conversation increasingly includes ETFs, institutional holdings, settlement infrastructure, Treasury tokenization, and payment systems. That is a fundamentally different story environment. And whether people love XRP or hate it, that shift is impossible to ignore. But there's one final detail that might matter more than anything else going forward: timing. Because crypto markets often move in stages, first comes doubt, then trying things out, then building the infrastructure, then big institutions accepting it as normal. And many analysts believe XRP may currently be moving somewhere between those middle stages. Not fully adopted, not completely ignored, but increasingly hard for institutions to dismiss, especially if broader trends of making things digital keep accelerating worldwide. And if that happens, the next few years could look very different from the last few years. Again, none of this guarantees future success. Markets are still unpredictable. Competition across blockchain infrastructure remains strong. And institutional finance always moves slower than crypto enthusiasts expect. But one thing is becoming harder to deny. XRP is no longer outside the conversation for institutions. It's inside it now. And whether that conversation ultimately becomes a major change or just a temporary one, Wall Street is clearly paying attention. So, as this story continues to unfold, the real question may no longer be whether institutions are watching XRP, but how deeply they eventually decide to get involved in the ecosystem itself. And honestly, that may end up being the detail that defines XRP's next chapter. If you liked this breakdown, let me know what you think in the comments. Do you think XRP is truly becoming part of institutional finance? Or do you believe the market is getting ahead of itself? And if you want more in-depth crypto documentaries covering XRP, Ripple, ETFs, regulation, and the future of blockchain finance, make sure to subscribe and turn on notifications so you don't miss the next one. Because this story is far from over.